right, let's go ahead and get started with 7.5. My objectives include file Form 1040 with itemized deduction and understand the difference between a tax credit and a tax deduction. So we're actually going to go through and fill one of these forms out. I am going to be kind of quick on it, so when you're getting behind, just make sure that you pause the video, get caught up, and then go ahead and press play again. Here's my key terms. Make sure you look at those in the textbook. So the first section is actually just filling it out. So if you look here, to fill this out, we're looking at first name is Brian, and we have Margaret. And it's O'Sullivan. And it's O'Sullivan for that as well. We have their address listed, their social security listed, and I'm actually going to just have you copy this right here. Now, before you start this lesson, you should have printed out the tax forms that were made available to you. So I need you to go ahead and print those out. Once you're done filling this part out, press play again and we'll get started. All right, the first example says that Brian and Margaret, they're married. They have one child. That's why you see that there are 3 deductions here. They have combined wages of $76,521. They had interest of $812. They have interest of $877 from a different bank. They got $444 in dividends. They got $1,200 from stock from Kodak, and Margaret won $300 in the lottery. If we take all of those and add them together, we find we have a taxable income of $80,154. And where that's going to go on the sheet, so actually line 7 is the $76,521. 1689 were the 2 bank interest. Line 9A is the 1644 for stocks or dividends. And then down below, we have lottery, and that was $300 on line 21. Line 22 is where you see the $80,154. For these, we're not going to really be doing the you-dos. I want us just to focus on this. So example 2, Margaret O'Sullivan teaches a night course at the college. She had $133 in educator expenses and $3,009 worth of moving expenses. So moving on to our form, we're going to, let's see if I've got it here. So looking at line 23, it's for educator expenses. So we're going to go ahead and put the 133 there. And then on line 26 is where it's talking about moving expenses. When we add those together, we get $3,142. And add those, it says on line 37 to add the 2, to subtract the 2. We end up with $77,012.00. So that's the whole first page is now filled out. And we have their adjusted gross income. Moving on to number 3, it says the O'Sullivans had $18,800 in medical expenses last year. Medical insurance covers 80% of these, and so they only have to pay 20% in medical bills. The IRS allows for medical and dental expenses for the amount that exceeds 7.5% of their adjusted gross income. How much can they actually file for their medical? Well, if we look at our $18,800, we find that 20% of it, which was the portion that they had to pay, is $3,760. Well, if we take their adjusted income at $77,012, remember that it is only the amount over 7.5%, which as a decimal is 0.075, which is $5,775.90. So because what they had to pay is lower than what is deductible, they actually can deduct 0 in their medical expenses. Example 4, it says they paid $3,298 in state income taxes, $3,567 in real estate taxes, and $3,096 in mortgage interest. So let's go ahead and look at what that's going to look like on the next page. So filling out the mortgage interest, at the top, we're simply going to relist our $77,012 that was on the bottom of the last page. We know that there was the $15,582. And we got that from, so $15,582, it basically says if for your itemized deductions was the $15,582. So what we're actually going to do is we are going to move to another screen listing our itemized deductions. Okay, looking here at our itemized deductions, we're going to go ahead and list them all. We know that in line 2 here, it talks about the Form 1040, line 38. That was the $77,012. We know that they had medical and dental expenses of $37.60. So it's covered anything over $57.82.65. So there was our 0 for that. We had income taxes of $32.98. And we had general taxes or real estate taxes of $35.67. When we add those together, we get $6,865. Okay, looking at example 5, the O'Sullivans had $987 to charity. They had $450 that they donated of close to different charities, and the most they gave any single charity was $120. So because they did not go over in any of the charitable contributions, they have no other forms that they have to fill out, but we do have to itemize here what we paid for that. So home mortgage interest points, sorry, I forgot to mention that, is the $396. And that comes down as $396 here. Now moving on to the gifts, there was the $987 in gifts by cash or check. There was $450 in total donations for a total of $1,437. Looking at example 6, now they had $9,230 worth of flood damage that was not covered by their insurance. So we're going to have to find their casualty deduction. So if we go to here, we find that our casualty loss deduction, we have a different form that we would fill out. I'm just going to tell you for purposes of here that the percentage that they were able to deduct was $1,429. And you can read in the book, it will go through how we got to that $1,429. I will have you read that. Example 7, they had $541 in expenses for job that was not covered. He had $1,439 in union dues, and he had 2 college classes of $23.15. So again, moving over here, we've got the unreimbursed expenses of $42.95. When we add those together, it comes down to the $42.95 again. We got the $42.95 by adding all of those values together. We multiply that line by 0.02%, and on line 26, we get $1,540. And so when I subtract the two from each other, it says on line 27 to subtract line 26 and 24, and I get $2,755 that is deductible. Now the next thing that I'm going to do is add all of these values together, and I end up with a total of $15,582. And that's where I got the $15,582 that goes on line 40 in this particular screen. Now it says subtract line 40 from 38, and I end up with, on line 41, $61,430. Next, it says taxable income. Multiply the number of exemptions on line 6D. There were 3 of them. So that's 10,500 is 3 times 3,500 is how I got that part. 43, now you're going to go ahead and just subtract them. And you end up with 50,930. Next it says taxable income. I'm going to go ahead and just put in there from the chart. You can look at the book to see where it is. This is the taxable income. So now we're looking at the tax. The tax comes out to be $6,836. Nothing goes in 45, so it's just $6,836. And that's how much they should have paid. Now they have a different couple of credits going on here. So if we look at the next example, they have an exemption. So we're up here to the credit. They have a tax credit of $780. And they also receive a tax credit of $133. So for that, we're going to go ahead and plug those values in. Under lines 48 is the 780. The 133 is on line 52. And a total of $913 in credits. Line 55, we're going to go ahead and subtract line 46 and 54. So $59.23 is the amount that we should have paid. We're going to total that down to $59.23 under line 61. Federal income tax withheld on their forms. If you go back and again into the book and see what they had withheld, it was $76.22. So we're going to pull that down to the line 72 here is $7,622. And so when we subtract the difference, let me make that a little bit more legible, $76.22. And we subtract, and in this case, line 72 is larger, so it looks like we overpaid by $1,699. So we're going to get a refund of $1,699. So you've now just filled out your first 1040 form, along with the 1040A for deductions. So last, we're going to go ahead and skip this last question. Good job on this form. Again, as I stated, I did go very fast in here. If there are any questions, please email me. Otherwise, go ahead and just pause the video so that you can get caught up with it. And that's it for this unit. Great job, everyone.